All right, guys. I have now dragged in the CEO of Deribit, John Jansen. He's on the Teamspeak to discuss his Bitcoin derivatives exchange that they're running. They've got a futures product and the options product. And so we want to hear a little bit more about their team and what their exchange is about. And so we prepared a bunch of questions to hit the main points. And once we've hit all those, we open up to the floor, and everybody in the TeamSpeak that is interested to ask something more specific to maybe an issue that we did not address when John and I are discussing, then you can ask then. But for the first half hour or so, as John and I are discussing back and forth, please do not interrupt. Just wait until I say. And because more likely than not, we will get to the question that you are thinking of, because we've already got a whole list of different issues from the technical side to the product side, regulatory. Everything is going to be covered. So just be patient. Let us get through it and wait to the end if you have a question. So we are recording on Twitch, just so everybody knows. And okay, so John is has been put into the room now. And so, John, welcome to the TeamSpeak. Just introduce yourself and tell us very shortly what Deribit is and what you guys are about.
Thanks, Chris. My name is John. I'm the CEO, founder of Deribit. I have been once upon a time a professional market maker in stock options. So at the moment, when I found out about Bitcoin, I started trading it and always waiting for this option trading platform to come around, and it never came. So, and then at a certain point I said, like, hell, I'm gonna build a platform myself. So this is basically why Deribit is there.
Great. So okay, so let's start with sort of some of the basic boring stuff, just about so just the team. How big is the team that you guys are? Like, where you guys based? What's the background of your team? Sort of what's the nationalities of the main players in the team?
I will explain. We have chosen as base currently Lithuania. It's where I am living. The reason that at least so far the central bank doesn't make any protest against any activity with Bitcoin, they have no opinion on it. Further, I am not a developer myself. I'm more the guy who tells the developers what has to be done. We have a core developer in Poland, working from Poland, and another guy working from Ukraine. And sometimes we have how is it called, a UI front-end developer helping us. And further, we as shareholders are a group of 3 Dutch guys.
User disconnected from your channel.
John, could you quickly disable the sound alerts on your client? I think we forgot to do that before, because otherwise when people are joining, the sound will echo through the microphone.
Exactly, I got distracted by those messages that users are leaving or entering the channel. Where is this?
So if you go to self and what Maddie wrote, if you go to preferences and then notifications and then disable from there.
Working on it.
Sorry about that, guys. I should remember to do that before. Yeah, and so the sound package is disabled, deactivate.
Okay, I think we should be fine now, if at least my microphone is still working.
Yeah, it's working fine. Perfect. Okay, so you are 3 Dutch guys who are owning the exchange, and you are outsourcing the development of it to various core developers that are they working full time, or are they sort of contractors that are only allocating part of their time to the project?
One is working full-time, one is working half-time, yes. They are both very experienced Erlang developers. Our platform is built with the programming language Erlang, which most people don't even know. That was a tough decision because it's difficult to find them, but they are good, usually, at least.
Okay, so so the engine of the exchange is Erlang, and what other kind of, like, how are you handling the databases, and what other sort of languages and systems do you have in place?
Now, that might be for me a difficult question to answer, that I don't know exactly how everything works. But we are using the database. One moment, let me look it up. Amnesia. This is a database that comes standard with Erlang, and it is working completely in memory, so it's extremely fast. When there is too much data in Amnesia, like when it becomes more like historical data, we move it to level DB.
Okay, and we're kind of jumping around here, but so as far as the philosophy that you had when you put together the exchange with your fellow shareholders, what did you have in mind in terms of just what you're trying to bring to the customers? Like, are you trying to be like really regulated and cooperating heavily with these kinds of authorities, or are you trying to be more like what exactly is your target?
No, we are so far a Bitcoin only platform, so it might be even impossible to regulate. That's why we are operating now from Lithuania, where they don't seem to make a problem out of it. But there are at the moment no plans for regulations, though I have to say that our platform is agnostic, or the matching engine behind is agnostic, meaning you could trade anything on it. And there are plans to at least try to find out if we could make a traditional Bitcoin exchange next to it, a la Bitstamp. So then we would go into this regulated area, but in Lithuania, you wouldn't even need to regulate it, even a dollar Bitcoin exchange.
So tell us then what Deribit's sort of views on privacy protection are, and what kind of KYC, know your customer, AML sort of stuff you have in place, and if you have any region locks on any kind of users.
Yeah, at the moment, we really don't know our customers. We ask only for email, basically. In the future, we will probably add the option to make yourself known to us, but this is more for your own security, that you could recover your funds in the case of an accident, or somebody could die, then family could retrieve the funds. But it's not that we want to know our customer to give it to authorities. That's at the moment is not on the agenda, unless we go to the direction of a traditional Bitcoin exchange. But Deribit in its current state is anonymous, but of course you would have to trust the platform.
Right, and so jumping back to the technical side, so where's your data center located, for which, so there's maybe some people that want to interact with your API and want to get as close as possible to minimize latency. So can you give us specifics about where the data center is located?
Sure, we have written this also in our documentation part of Deribit. It's located with OVH in Strasbourg. I have to admit, it's not a data. Well, that's a data center. We just have 2 servers running there. If we get bigger, we might need a little bit more. If you place your VPS or dedicated server in the Strasbourg data center, you have a 0.1 millisecond latency.
Okay, that's that's important information for prospective market makers. So that's good. So what's the 2 main products that you're offering right now? They are just the weekly futures contract, and you have also a series of options contracts, vanilla options, put and calls. Are these the only two products you're offering right now?
It looks like.
Okay, and so where are you seeing most of the volume? Is it in the options side or the futures?
Most of the volume is in the future side. The options, it's probably a question you might want to ask if the market is mature enough. The market is mature enough, only it has to get concentrated somewhere. So at the moment, it's difficult to make tight quotations for the options. So people, it takes time for the options to get started. Our aim is to be the de facto options exchange for Bitcoin.
Okay, so you're in the vision that you're having, at least short term with your strategy, you're trying to focus on options rather than futures, because right now there's a handful of competitors, quite competent competitors in Bitcoin futures. So you're trying to focus more on options, or are you sort of dedicating equal time to both? Or?
Well, actually, completely correct. There are other futures platforms, but futures is equally important because we have the combination. So you could have an option position and together with it the future position to hedge it. So it goes really together. But our unique selling point, of course, is the options platform.
Right. So let's go a little bit more specifically into the features of your options product, because I think everybody, most of the people listening and participating right now, they know futures, they understand futures, and basically you have a 20x leverage, which requires 5% initial margin for the futures, and the risk management is handled through a socialized loss system similar to OKCoin. Is that correct?
It is correct, but it's more like an how to say it? It's like the last resort backup. There really should never be socialized losses. That's why we also just have 20 times leverage. We have a much more advanced liquidation system than OKCoin. It's really a really big challenge to try to get back. If you even would try to go bankrupt, you wouldn't be able to, probably.
Okay,
and then, so let me speak. Sorry, I stopped too early. And then we have a 100 Bitcoin insurance fund, for which we haven't put a proof, by the way, on the website, but we will make a dedicated address and move 100 Bitcoin around, that you guys see at least that we have them, though it's maybe still not a real 100% proof. But there is a 100 Bitcoin fund, and really the objective is that this fund doesn't even get touched, and for sure doesn't get depleted. It's also in real time, so you can see in real time if there are any bankruptcies and if the fund is reducing.
Okay, and this fund, this socialized loss, it doesn't cover just futures, but also the options product?
Everything. But so to get it clear that there should not be socialized losses, only I can also not sell ourselves as a clearing organization. A clearing organization guarantees for 100% everything what happens, the counterparty. Deribit is the counterparty. They will take up losses up to 100 BTC, but it should really, it's almost like we are clearing everything, but I cannot guarantee more than 100 BTC loss. After that, socialized losses would happen, but we will adjust our risk management system such a way that we will never get there, or we don't want ever to get there. It's not like BitMEX, for example, that have a more higher leverage system with more socialized losses.
Okay, so let's then, because as I said, people more or less understand the futures product. So, but options are really new to people, and as you said, this is your focus. This is what you're trying to really carve a niche for. Deribit is in vanilla options. So, tell us, to those who are new to options, explain a bit why a trader who's normally used to trading Bitcoin futures at say 20-50x leverage, why would they want to trade these options, these puts and calls that you're offering on Bitcoin on your platform?
Yeah, to explain why people would want to use options, first would have to maybe explain what are options exactly. There are various reasons why people would want to trade options. The first reason, just to gamble, to to play, because you can make high leveraged gambles. On the other hand, you can create extra income on your Bitcoin position by writing calls, which means selling calls. For example, you could sell the December 700 call. For example, I don't know, I'm not looking right now at how much it's trading, but for example, $60. So you could agree with somebody, to the buyer, that he has the right to buy the Bitcoin for you for $700 and you get $60. Whatever, if Bitcoin goes to 1,000, you'll have to sell it for 700. If Bitcoin goes to 300 or whatever below 700, you can keep the $60. So if you are a little bit defensive with your Bitcoins, and you could sell calls, or if you expect that the price will not go up a lot, you could sell a call to get extra return on your equity.
Okay, so there's two different kinds of options out there, right? There's the European style where you get exercised at expiry, at the strike and all the parameters of the contract, and then there's the American style where you can exercise whenever. So as I understand it, these are cash options that are basically European, right?
That's correct. It's so-called cash-settled European options. European option means that you cannot exercise your right to buy or sell before expiration. Simply at expiration, it exercises or not. In our case, we do cash settlement, a Bitcoin cash settlement. It means that you're not actually going to buy or sell a Bitcoin, but you just get the difference in BTC. For example, if you buy the 700 call, if at expiration the price of Bitcoin is at 1,000, you would get $300 in BTC. So that would be 3/10 of a BTC, which is $300.
Options are unlimited loss. How do you manage your unlimited loss?
That's true. Options are potentially unlimited loss for sellers of options. Buyers of options have unlimited profit, and they can, of course, lose their investment. Like I spoke about it with the futures, we have automated liquidation system, which means that as soon as a position doesn't have enough equity for the maintenance margin calculated by the application, your position will get reduced in small steps. So you won't get liquidated all at once, but the system will slowly reduce your position such that your maintenance margin will always be lower than your equity. So there will not be unlimited loss, because you will have been closing your position before that's happening automatically.
So when someone writes an option and they're on the hook for that, if their maintenance margin is running, their equity is running really low to where they're flirting with the maintenance margin, then they're basically getting liquidated out of that position, and you have to find a counterparty to take that other side, right?
That's correct. You would have to find a counterparty on the other side. It's not that you would get liquidated at the worst price. There are limits in the system that prevent being liquidated at a completely ridiculous price. For example, something that's worth half a Bitcoin gets sold for 0.1 Bitcoin. That's impossible.
So tell us more about this limit. So you have actually let's get into the index. So basically, whenever there's any kind of derivatives, whether it's futures or options, you have to have some sort of basis of what the price of the underlying is. And you have chosen as a representation of this underlying an index of a number of different exchanges. Can you go into exactly what that is, what it's based on, and how that affects the ability, for example, for people to hedge in the market?
Yes, the index. So the index is like an average price of Bitcoin over various exchanges is extremely important. We have been looking around for a good index, but kind of couldn't find it. And even if you would find it, you would have to trust that party. So we decided to create our own index, which comprises of the main dollar exchanges. There are some security features that make the index more stable or less prone to strange behavior. For example, the highest, it's six exchanges are part of the index. The highest and the lowest price are removed from the price calculation. So if we get a weird short squeeze on Bitfinex and Bitfinex is trading $200 lower, it will not be part of the index, because only the middle four are part of the index, and they are all dollar exchanges. So it's a very relatively predictable, easy to understand index.
Okay, and so when someone is trading either futures or options on your platform, what is this limit up down protection you have relative to this index? Like, how do you protect traders from getting manipulated by bigger traders on the market?
I don't exactly understand your question. The index is one thing, but what the future is trading at is another thing. We have some security measures in place that, for example, it could happen that somebody makes a position in the futures and then buys it up, trying to create a so-called short squeeze. Actually, what we have seen yesterday with zero cash on BitMEX. This is not allowed, or it's not possible, because there is a limit between which the future is allowed to trade in relation to the index. Currently, this is set to 3%. So, like, if you would just try to make the future trade at 800 right now, it would not be possible, and the mark price would still be 720 more or less.
Okay, so you have a 3% barrier on the price of the futures and options coming outside of the index.
This was speaking just about futures. This doesn't relate to options. This 3% is for the weekly future. We don't have yet futures with longer dates. We will introduce them in the future, and they will have a larger band than 3%. But 3% is enough for the weekly future.
Okay, in the context of the options, then how is a trader going to be confident trading the options on your exchange, knowing that it's going to be sort of realistic and following the real market, and not just a counterparty whale that just manipulates the price and squeezes them? And how do you protect against that in options?
Well, in the first place, the option expires at the value whatever it is. It's impossible to rig that unless you rig all 6 exchanges, but that's what the market basically is. So you are basically talking about if a person wants to close its position before expiration, and then it would need to find a buyer or a seller to take over his position. That's simply putting in an order and trying to find a counterparty.
Yeah, but again, the issue isn't what happens at expiration. The issue is the price action of the contract up until expiration, because someone it's putting down margin to enter the options contract, no matter whether they're going long on a call or put or whatever. They have to put margin down, and when their equity is reaching the maintenance margin, then they're kicked out. So there is potential for manipulation in the market where a counterparty could squeeze traders. How are you? There's a reason why you have the 3% ban on futures. So how are you going to prevent that sort of behavior in options?
Yes, I will explain it. Now I have to get a little bit technical as for options. Options, you can price options theoretically with implied volatility. That means that any price of an option resembles an implied volatility of the underlying value. In this case, the Bitcoin exchange, the Bitcoin index. Our risk engine checks continuously if the market of the option is realistic. So there is a band. Actually, we as risk management can change those settings. There is a band between which the value of the option is acceptable by the market. So it's you cannot put the price of the option to implied volatility 300. Then the system would say, no, this is manipulative. We give it in our risk management system still a value of 60 or 70% implied volatility. But I doubt that listeners understand exactly what I just said.
Well, I mean,
I disagree.
There's a number of traders that are highly technical here that have experience in options. So there's most people probably don't, but so I think when it comes to how you're doing this risk management system, it should not be a black box. It needs to be transparent so people understand exactly. So to give a short example, BitMEX with this Zcash contract had a 10 BTC limit on the price, which was not documented, and there was a risk management feature apparently. So it's really important, that we're all big boys here. We can understand technical explanations. So if you make a transparent explanation of how this trading band is implemented in the options context, then people need to know exactly what the boundaries are. You can't play the game if you don't know the rules, and it's important to be incredibly transparent about all of these features. Even if it seems really mundane and minute, it could still be important to some.
I completely agree with you. This is explained in our documentation. It's not a secret. So basically, our risk management system gives a band between which an option is valued. I don't remember exactly what it is. It's at the moment between 30 and 60 implied volatility. We could change those settings. If the market becomes extremely volatile, we would have to accept higher valuations of those options, but the market currently is around 50% implied volatility. If there is an option on the screen quoted implied volatility 300, really it is a manipulative action. This could be meaning that this person tries to make us think this option is worth a lot more to get other people into liquidation. But this is impossible, because then the risk management system would say, no, this option cannot be worth more than a certain value. This is also how other exchanges work. This is quite normal for options trading clearing companies.
Okay, good. That's good that you clarified that. So, because people, whenever they're trading with high leverage, they really want to make sure that they're not getting screwed by some counterparty, or even worse, the exchange that's on the other end. So it's really good to have an open process like that. And so, how many strike prices are you offering then on the options? And is there any plan to either concentrate the liquidity to fewer or expand or anything?
Yes, I think at the moment it is okay. The band. The band looks also bigger because Bitcoin is moving, and if it goes from 500 to 700, all those 500, 510, 520, 530, they also still exist. You cannot just say that they don't exist anymore. So that's why there are quite a lot of them. But the trading really concentrates around the at the money strikes anyway. So there are a lot of strikes. This is also another reason why our matching engine has to be of very high performance, because basically a market maker has to quote like 300 assets, for example. If there would be 300 or 150 strikes, for example, over all months, that means 300 assets, puts and calls. And if you want to put a buy and a sell order and all of them, you would have to quote 600 orders continuously, and you will also want to change them in a very short period of time. On our platform, this is not a problem. A single trader can do 1,000 orders within a second without any problem.
Okay, so then who exactly? Because I mean, anybody can go to deribit.com and look at the options book and the futures book. So who exactly is providing liquidity at this point, and how many sort of independent market makers do you have to provide liquidity, and what sort of incentives do you have for new market makers to come aboard?
Okay, now here I'm going to be very honest with you. It's basically me who is quoting the options. Not that I want to do this job, but I have to start somewhere to try to get things going. So there are other players. Sometimes they put in volatility orders, which is basically some kind of market making. But the only market maker currently active, as far as I know, and I should know, is us basically, which is well, we are not, but we could abuse this, because we are maybe on a big exchange. The exchange itself is not supposed to trade.
Okay, so then anybody trading right now is basically having Deribit as their counterparty. So, but who or what kind of incentives then do you have for new market makers to come on? Like, do you have any sort of like, for example, BitMEX has negative fees, which gives a rebate to those who are providing liquidity. What sort of incentives do you have, and actually in general, what is your fee structure?
Yeah, we are not always the counterparty for trading options. It's a free market. We are currently participating in the market, and it's true that the majority of the trades we are participating. I forgot what was your question after that.
Yeah, about just the incentives for bringing other market makers on board. So like BitMEX has this rebate in their fee structure. So I guess it's a two-part question about what exactly your fee structure is, and if there's any sort of market making deals that can be made, or so sort of like on an individual basis, or how exactly you would incentivize market makers to provide liquidity to your platform.
Yeah, we started out with extremely low fees, which like 0.01%, but without any rebates, simply because there is not much rebate to give with such low fees. So basically this means that there is, as for rebates, no strategy for us to attract traders. Our idea is to attract traders because they want to trade on the platform, and not for trying to make money off the rebates. But with 2 clicks, we can change the settings of the fees. So we could change this in the future, but I, as a professional trader, I prefer to get an efficient market, to have simply low fees for everybody. But to attract market makers, it might be more interesting to work with rebates. This could be changed in the future.
So along the lines of rebates in general, so you currently do not have an affiliate program. I mean, I think actually all of the other futures exchanges, whether it's OKCoin, BitMEX, Crypto Facilities, CoinPit, they all have an affiliate program. Do you have anything against affiliate programs? Are you planning on launching one, or you have an exclusive one with certain individuals, or how does it work?
Yeah, at the moment, well, at the moment we are trading for free, so right at this moment, an affiliate program would make little sense unless we would be paying to get new customers. Yes, with our current fee structure, also the low fees that we would have from January and ongoing, we would not be working with affiliate programs. But this is something that we can reconsider, because we need to find a way to get more people to get the platform better known with the traders that are in trading Bitcoin.
Yeah, that's I mean, Bitcoin's a kind of a small word of mouth kind of group, so it helps to incentivize existing traders to make a little extra by referring their friends. So and jumping back to then this risk management issues, because so you in the end you have a socialized loss model, even if you're doing everything you can to minimize the occurrence of any socialized losses. But in the end, what's back in the system is this 100 BTC insurance, and if there's system losses due to extreme volatility, then it's just going to be cut from the profitable traders at settlement. There's alternative models to this, where you can just terminate the counterparties that are not adequately capitalized, and then only the winning traders are affected. Or BitMEX has a variation, and BTCC has a variation where they are auto deleveraging, so it's affecting certain counterparties in an order. So what makes you use this socialized loss system as the fallback rather than a termination style auto deleveraging sort of system?
Actually, in our conditions, I think there is also a small part written that we could deleverage a winning position under the most extreme circumstances. This is just written there that because we all know that really, really, really weird stuff can happen trading cryptocurrencies, though currently Bitcoin is very stable. Basically, the reason is that we didn't implement it yet, but we are also not really thinking about it, because closing positions of winning traders, you don't really know if it's a winning trader, because it could be a hedged position. For example, you buy on BitMEX and you sell on OKCoin. Then your winning BitMEX position gets force closed, and then your OKCoin position goes against you, and anyway you feel like you lost. So really the best system is just that there are no forced closings of positions and no socialized losses. We simply cannot guarantee more than 100 BTC. At this moment, it is really impossible to have at this moment to have socialized losses on our platform, simply because the trading is not big enough to get such a loss.
Okay, but so then it's you in effect, or in practice, you are sort of have a hybrid where you're probably, it sounds like, more willing to do this deleveraging against the traders than to then use the socialized loss, or to because you said you haven't had any drawdowns on your insurance fund as of yet, right?
No, surely no, we didn't have any drawdowns. Like it's really almost impossible to go bankrupt, because as soon as your position, and this goes in milliseconds, like as soon as your position is a little bit too big, poof, you get one contract is being sold, and then one is doing 25 rounds a second. So within 1 second your position gets checked 25 times if it's not too big, and if it's too big, it could get 25 times reduced a little bit. So it's really, 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 really difficult to go bankrupt.
So if Deribit is my counterparty and I get liquidated, and Deribit is you guys are the only ones providing liquidity right now, and can I get liquidated into you, where you are on the other side of the contract as well? Like, can you self-trade, or how does that work in the trading logic?
I don't understand what you mean with self-trade. Currently, self-trading is disabled on the platform. You cannot trade with yourself, though we could reactivate that, but usually people don't plan on trading with themselves. But yes, in many times, currently we are the counterparty of any trades. We want to change this in the future by attracting other professional traders. Like we would prefer not to do it. Actually, it's just our way to get things going, basically, specifically for the options, which is also difficult to find people who know how to make markets and options. Apart from that, some significant capital is required.
Okay, so is this self-trading disabled? Is it overridden if someone's liquidated? So if I'm trading with you, and you're the only one who has bids in the book, and I get liquidated, and it gets liquidated into your bids, does that? It doesn't really count as a self-trade, but aren't you the counterparty then on both ends if it gets liquidated into your orders?
No, if we at the moment are basically just another party on the exchange, nothing more and nothing less.
But in the event of liquidation, if I get liquidated on a position that you're the counterparty for, who is then, when it gets liquidated, who's taking then my side?
The one who is trading against you is taking your side.
And if
in
it's
this case,
you,
it could be us. Yeah, of course. Yes, sure.
but that means that if you're already on the side when I get liquidated, and then it gets liquidated into you, then you're on both sides. Isn't that a self-trade?
No, that's not a self-trade. I think we have here a little misunderstanding of definition also of what is self-trade. But I have to disagree here with you. Sorry, or at least not understand exactly what you mean.
Okay, so can you clarify for me? And if we can't fix it at this point, then we'll move on to the next thing. But so, okay, me and you are trading on your exchange. I'm the counterparty, and you're the other counterparty. And let's say I get liquidated, and you're the only one with orders in the book. And there's one contract in existence. You're on one side, I'm on the other side, and then I get liquidated. What happens to that contract, which then has you on one side, and then I'm out of the question? Who then replaces me?
I really don't understand the issue, because there is no issue. Your position simply gets reduced, and the other party's position gets increased or reduced, depends on what is his position. It doesn't matter if it's me or somebody else. We are at this moment, hopefully later not anymore, just another party trading there. So I don't get your point exactly.
Well, I'm just thinking about. I mean, maybe it's not self-trading, or maybe it's something else. But I'm just wondering if there's a situation where you end up being on both sides. Or maybe I'm not understanding exactly how the liquidation process is. But as I understand it, the liquidation is passing off the contract that I get liquidated on. It has to get passed off to someone else. So.
No, let me explain. Liquidation is simply that Deribit is actually forcing your account to place orders in the system, because your position is too big. You have, for example, 100 contracts, and then the system decides that 100 is too much, it must be 99, so you have to sell a contract. So Deribit creates a sell order from your account into the market. With a price that we are sure it gets executed, but never more than 2% from the index.
Okay.
So even the good question would be, we as an exchange could manipulate. We could see who is going bankrupt and then try to push him into bankruptcy, and then change the prices to get as much money as possible. We are not doing that, but theoretically, yes, it would be possible. Cannot say otherwise.
Yeah, no, I was just thinking more the logic of of how the liquidation gets passed off, and because on your exchange, okay, so you do have a place to show the open interest of how many contracts are actively open with the counterparties on either side. So yeah, okay, we can just drop that. I mean, I think you've addressed more or less the issue on that. So right now 20x is your maximum leverage that you offer for futures trading with Bitcoin and options trading. Are you most of the other, like BitMEX has 100x, Crypto Facilities has 50x. So do you feel like you're at a competitive disadvantage when others are offering lower margin requirements for traders who are really hungry for high leverage?
Surely, we understand that. That's why I claim that we very probably will never have, or will not have socialized losses, because simply we require more margin to trade. That's quite simple. It's very simple to increase this. We could trade also 100x. It's just a click on a button. But at the moment, we will stick with 20, or maybe increase it to 25. But I find the current levels of leverage responsible for not to create bankruptcies.
Okay, and you said before that it's agnostic, your platform, and that's both in respect to what is being traded, but also right now you only accept Bitcoin. And this has certain benefits on the regulatory side and such. So basically anyone who wants to trade on Deribit, it doesn't matter where you live, you just need an email address to sign up, and you only deposit and withdraw Bitcoin. And by the way, how fast are you processing the deposits and withdrawals? Like if someone jumps on your exchange, they make tons of money and they want to withdraw, what is the normal experience for someone in that situation?
Yeah, this is a good question. We require one confirmation. Any withdrawals done, as long as our hot wallet has enough balance, are done immediately, and immediately is like within a split second. So withdrawals are extremely fast, and deposits are also extremely fast. One confirmation, but you will see it in your account within a second. After you've done a deposit. Only then it's waiting for one confirmation of the blockchain.
Okay, so how do you protect customer funds? What is your strategy? I mean, we recently had this disastrous Bitfinex hack where they outsourced their customer fund management to a third party, essentially. Are you guys doing anything like that, or how exactly are you? And what exactly are you doing to protect customer funds? And are you transparent in exactly the security procedures as such?
Yes, as for this third-party security, this Bitfinex model, I thought I didn't understand what was good about it, but I guess maybe I did understand there was nothing good about it. We keep it more simple. We have a hot wallet, we have a cold wallet, which is something in the safe. If the hot wallet goes above a certain balance, automatically funds are removed to the cold wallet. And if it's needed to replenish the hot wallet, we have to send coins from the cold wallet to the hot wallet. So far, it's quite stable. A little bit, well, there's coming in a little bit more than what's coming out, but so we basically don't have to touch the system, and there are a few coins at risk. Our hot wallet is a modified version of Bitcoin Core to have some added features to make it very hard for a hacker to get those few coins that are there.
Okay, and just to be specific about the system's parameters for what percentage of customer funds are held in cold storage, what specifically is there?
We set this currently manually. We have so far not a huge amount of funds yet on our exchange. So at the moment the percentage is quite big, but it's more than covered by our own net value. We are we as shareholders, apart from this 100 BTC fund, we have significant Bitcoin holdings. So at this moment, it's not an issue at all. If the deposits go up, we will keep the hot wallet probably at 10%. From what I see now, that should be more than enough for people to be able to withdraw instantly, which is our target, that people can withdraw instantly, because sometimes you need the funds on another exchange as soon as possible. So we don't like to do like BitMEX is doing once a day or something, because a trader might want his funds in some other exchange as soon as possible.
Absolutely. Okay. So jumping around a little bit again, back to the trading engine. So right now it only accepts limit orders, right? So if a trader, say, wants to make a strategy where they are triggering stops in the market, so they don't have to sit in front of the screen the whole time they're in a position, you don't have stop orders or any other kind of advanced orders. It's simply limit orders only. And is there any plan to change that?
We are working on it. We are gonna do. Wait a minute, I forget the name, but we are gonna do all the ones post only, hidden, stop loss. Those three are on the end market, which is kind of a special edition limit order in our case, because you have to trade within a certain band, at least for the future. But stop loss, hidden, and post only are on the agenda. I don't know when it will be ready, but I hope within a month.
Yeah, because I mean, stop loss is just critical. Like any trader who's in good practice is usually taught that they need to use a stop loss no matter what. And so once you have this order type, it's also important to understand how effective the stop loss is, whether it's just a simple trigger that throws your order, it's the way BitMEX does it, or whether it's a different kind of system. So that's also really important. I think it's one of the most sort of traditional risk management features in trading for an engine. So, but that's good that you're saying maybe about a month or so. That's good. And so you're then capable of branching out beyond Bitcoin. You're maybe like in some maybe in a year from now or 10 years from now, maybe Zcash is what is that how agnostic, as you say, your platform is, where you can basically shift to accepting other crypto, or maybe shift to creating new products? Maybe do you have any sort of desire to add, the way BitMEX does, altcoin trading based on Bitcoin, or maybe even a CFD style where you're doing legacy market products? Is there any sort of plans for expanding in that area?
There are plans. We don't know exactly yet in which direction, but like you say, the matching engine can trade anything, so we don't have to restrict ourselves to just Bitcoin and Bitcoin options and futures. We could even trade options on Microsoft stock or whatever. Anything is possible, as long as there is a stream of data coming into the platform.
So you're facing some stiff competition in general in the Bitcoin future space. There's a lot of really good talented teams out there. So what are you offering then? I guess options is the most obvious thing, but in general, how are you trying to differentiate between these other teams that have really good futures products? So what is Deribit offering above and beyond?
If I compare ourselves with, for example, OKCoin, which have the same type of option, the same type of futures, we have a more friendly and more advanced liquidation system. It's this automatically reducing your holdings if your margin is higher than your equity. With at least when I was trading on OKCoin, I understood that it's all or nothing. Like if you go beyond a certain point, all your position gets lost. On our exchange, it works different. You get incrementally, bit by bit, your position gets reduced. Further, our matching engine, well, at least as far as we could check, at the latency on OKCoin is 5/500th of a second. When we try to check, I hope later to receive feedback on the contrary from any listeners. We have a latency in our matching engine of 0.5 millisecond. So our engine is maybe the fastest of any exchange currently active.
Okay, so one more question, and then I'm going to bring up a small. When we start the Q&A, I'm going to start with a small question, and then everybody else can ask thereafter. So, so my one. Give us the listeners some sort of idea about like your philosophies in general about crypto and about Bitcoin. Like, I mean, there's a lot of political stuff going on about block size, and so just where are you when it comes to this sort of scaling Bitcoin and the philosophy towards altcoins and stuff? So just give people an idea where you sit in the community on that spectrum.
Well, I have not enough technical knowledge to have an opinion on what should be done with Bitcoin. What is clear to me is that Bitcoin protocol needs to be changed and improved, else it will die out or be overtaken by another coin. But I have no opinion on what or that another coin should take over or what exactly Bitcoin should do. What I do know is that we need to reduce transaction costs, especially in the future. Well, we have this Lightning network under development. So yeah, like the way it looks now, it seems that even Bitcoin can make it. In the past, in the beginning, I was convinced superior altcoins would take over, but it seems we can improve Bitcoin and stick with Bitcoin.
Okay, good. So, okay, I think that, I mean, we've been discussing for about an hour now these different topics. So I think we've hit all the planned issues that we wanted to. So I'm going to start. So I guess we'll start this sort of Q&A session that's more broad for everybody to participate. And I'll start it off though by. So one of the issues after discussing these things with you, one of the issues that sticks out to me is that you're outsourcing the development, the core development of the engine, and so this sort of brings up some perhaps security issues for traders. If you don't have an in-house sort of high-level key person on your team who is doing the development, it strikes me as a bit of a weakness when you have guys that are, one guy that's full-time, you have others that are contracting, and there's been some issues, for example, even with the so-called trustless exchange. Also, it's Voorhees. What the hell is this exchange called again? But that guy, he's something with an S. But they're barely holding any bitcoins. But they had a key sysadmin who was not really. They didn't do proper background checks on and such, and he ended up screwing over the whole company, right? So this shows the dangers of outsourcing sort of critical core roles. So can you tell us like why maybe people shouldn't worry about this in Deribit's case, or what you're doing to mitigate this risk?
Yes, it's a very good question. The core developer, there are two developers, and maybe sometimes somebody helps a little bit, but the main core developer, the number one architect, to if I can say it like that, I have a very long relationship with him, developing other software projects in my career, as to say. So as for trust from my part, this is completely, I trust it completely, but I don't, but there is a risk. He is capable of stealing the hot wallet. He admitted that to me because he developed it. There is no way around it. But yes, I know him so good. This is for me not an issue, and he is part of the Bitcoin Deribit team. Only we are not sitting in the same office.
Okay, so this full-time core developer, is he incentivized with equity? I mean, you said yourself now that he can run away with the wallet. So I mean, traders, that concerns traders when you are saying that this kind of risk. So I mean, how is he incentivized to not run away with the wallet? And so I mean, you trust him, you say personally, right? But I mean, it's hard enough for traders to trust you guys running the exchange. So now we have to trust now another guy who's not so much out in the open. So sort of what kind of incentives are you giving him to not run away with the wallet?
The developers have also equity, a small part. So this should be an incentive to have the heads in the same direction. I was speaking about 3 shareholders, but there are 5 actually. But we put the capital. They have the developers have a small share. About stealing the coins. Well, if it would happen, we also cover those losses up till this 100 BTC. At the moment, the hot wallet is not very big. There's at the moment no reason to steal, but there is always a chance. I cannot say the chance is 0%. It's simply not true.
Okay, so shot, if your microphone is enabled, you can feel free to ask a question yourself.
Yeah, how you doing, sir? I've traded a lot of U.S. Options and equities. Are you gonna, for your sizing engine, when a position is approaching, say, liquidation, are you gonna look at each position independently, or are you gonna calculate them as a synthetic? Like, for example, if I roll a straddle or say a condor.
Yes, that's also a very good question. This is on the to-do list. So at the moment, it's calculated individually. We have to implement margin calculation for option combinations to have a lower margin. And even after that, we want to implement portfolio margining, if you know what that is. But at the moment, it's all individually, and this is something that we have to improve.
And do you have, is your system fast enough to handle judging it as a synthetic? Because that's significantly much more load.
Yes, it's fast enough to handle, but this wouldn't be anyway any problem, because there can be servers added to the system to handle this part of the job. It wouldn't be any problem.
Okay, anybody else that has any questions for John, the CEO of Deribit, Futures and Options Exchange for Bitcoin? Any questions at all? Now is your time.
Yeah, I just want to clarify one thing with the futures. So as your system is currently, things like contango and backwardization are not possible?
Yes, it's possible. We don't have to trade on the index. There is a limit where the option is allowed to trade. The future is allowed to trade. This is simply in a worst case scenario that somebody wants to manipulate the future by giving it an outrageous price, when there is, for example, a very thin order book. You could buy yourself through the order book to put the future 20% above the index. We don't allow this.
And is your algorithm for the weighting of the index public?
Yes, it's public. We even have a page for it where you can see in real time how it is calculated on the application. Let me see for a moment how it's called. Yeah, we have a page called Stats BTC Index, and if you go to that page, you see how our index is calculated in real time.
So I have a question. So if you So you
Wait,
only
Phil, could you introduce?
Oh yeah,
Could
I'm
you
sorry.
say who you are?
I'm Phil Potter. I'm with Bitfinex. So you only allow on weekly futures. You only allow a deviation of 3% away from the index. That's what you said, right?
Correct.
So how do you police that exactly? Because you could have a situation where somebody has a bid in the book, and the index price moves much lower. What happens? Do you cancel the bids?
Well, probably in in the first place, this bid would be taken out by the market
Well,
because
no, maybe not. Maybe not, because I mean we've seen many instances in Bitcoin where we've had these times where we have there's a lot of futures premium, even for relatively short-term futures. We've seen it countless times. So 3% is not outrageous for 1 week.
yeah, it's correct. It's not outrageous, but you were giving the example that actually the market is going down and the future is staying up. In this case, somebody will trade against it, but if there is nobody trading against it, it won't be possible to trade against it. The order will be taken out.
Okay, so I mean, let's assume it's just a very illiquid market. Nobody's trading there, for example, or nobody's paying attention. I'm just saying, so that if it's one thing to prevent an order going into the book based upon its distance away from the index, but are you also going to actively remove orders from the book? Is that how the code works today?
That's how the code works today.
Okay.
Okay, we've got a more general text question from a trader who wants to know a little bit more about educational and professional background of yourself and whether this is backing to carry the exchange.
You want to know more about my background? Is that correct?
Yeah, just like your education, with your professional history, like how the relevant stuff to running, a financial exchange.
The relevant stuff. Okay. Once upon a time, I was a professional market maker in stock options. So here comes my expertise from as regarding options. After that, I've been doing a lot of stuff, but little to do with finance. So I have a history of 2 years as a professional market maker. The other things I did don't really relate to Bitcoin, other than that I'm a fanatic anarcho-capitalist. So Bitcoin is a big present for us.
What's your educational background?
Can you say again?
Your educational background.
My educational background is university dropout of econometrics. Apart from that, I'm a licensed pilot, though I'm a professional pilot license, but has little to do with finance.
And how old are you?
I'm 39.
Okay, so you've been around the block. Okay.
I've been around the block, yes.
Was the choice to go to European style options because of location, or did you have a technical reason for that?
The biggest reason is basically a margin. If you want to do with delivery, people would have to deposit lots of coins, and we want people to trade as much as possible with a few coins as possible, with responsibility, so that people don't go bankrupt, but still with a few coins as possible. If I want to do physical delivery, if somebody wants to sell 10 calls, he would have to put 10 Bitcoins on the platform, else there is no way to be sure that he can deliver them. In our case, this is not needed due to the cash settlement.
Anyone else can feel free to ask questions while we have John as a guest here.
I have some questions, but I was away for a while, so I apologize if they were asked before.
Yeah, go ahead.
The first one is concerned the domain name. Why did you choose to obfuscate the contact details of your domain?
Good question, because at the moment when we registered the domain, it wasn't clear yet where we would be hosting the company. And we are actually at this moment, we will set up a new company, and then we will put all the contact details with the domain.
Okay, I thank you. I have another question, which is again related not to the domain, but to the website. It's a tricky question. There are some errors when loading the page using Chrome. Those are 404 errors, so there are server-related errors. These are public errors. It's not a big deal at all. But I have fears that there could be similar non-public errors elsewhere in the website that could be the catalyst of an eventual loss of users' fund. What might you say to reassure me?
First of all, I'm curious to which errors you're talking about. As for our platform stability, we have been running for about 3 months now. Once we had a crash, or if I can call it a crash, but the system stopped working. So our software is extremely stable. This is another reason why we choose Erlang as a programming language. It gives it's the system with most uptime percentage of any software. Usually, of course, it depends how it is used.
The error, thank you for your answer. The error I am talking about is not a big deal. I will send it to you to a private message. It's basically just a logo that is missing, but it makes an error. It's a visible error. I have another question again. You say that 90% of the Bitcoins are in cold storage. Do you have plans to give us transparency and prove such claim?
Yes, we can try to show more about this. It's always difficult to say if it's a real proof or not. A real proof will be an independent audit by, and then still it's not a proof. But like we independently, without another entity checking on us, it's really difficult to prove something.
I do have an idea, if you permit. It would be to sign an address, to prove ownership of a Bitcoin address, and to make that address public, so we can check live.
Yes, I understand
that. It's a possibility. It's a possibility.
Actually, we are going to do that, at least for the 100 BTC fund. We are going to try to get a nice address starting with Deribit, and then we will, at a set time, we will make a transfer in and out. For example, we will do this we're going to do it every Friday at 5 o'clock. And then we will move those funds so that you guys see we control those funds. This is something we could do.
That's nice to hear. I will nevertheless let you know that choosing a vanity address is a loss of security somehow. I will send you the message with the error. Thank you.
Okay, thanks for your comments.
Any other questions from users that are listening?
And as for the vanity address, of course, it doesn't need to be a vanity address. I just made that up. Well, we had that as an idea. It can be any address if vanity is not safe, of course.
I would love it if it starts with a 3.
Multisig, correct.
Yeah, so I think we've hit most of the technical, product, security, regulatory points. I think it covers most of the bases that I think most traders and prospective customers would want to know. I'm going to make a final call for anybody that has any question that has not been addressed, feel free now to speak up and ask now.
Well, I can't send him a message because TeamSpeak. I will paste the error publicly. It's not a big deal at all. Is that okay?
Sure, that's okay. No problem.
Okay, so it sounds like there's no other questions there. So I'm going to then close out this discussion and Q&A, and I'm going to say thank you very much to John from Deribit for coming on as a guest and interacting with the community and having a very fruitful discussion and receiving questions directly from the traders. Thank you very much, John.
Thank you guys for having me.
And yeah, so that's the end of the discussion there then. And okay, so I mean, just in general, you know, we are always around. This is 24/7 community, and I mean, I know you guys are now making more effort in marketing, so I highly recommend that you get involved with Telegram. Telegram is an open source, sort of encryption focused platform where a lot of traders are sharing charts, and so we have, you know, over 1,000 users there. And you know, it's good to interact. There's a lot of other exchange owners are on there, so you know, I think it would be really helpful for you guys to interact more on that level as well, because as traders are using your exchange more, they're gonna have a lot of questions, and it's good to just be present, because then they feel like someone's around and you're not just like some exchange in the clouds that's aloof. Yeah, it'd be great if you guys, and you guys are always welcome to hang out. I mean, we have here always different people from different exchanges that just hanging out. You know, it doesn't have to be super official business. There's a lot of you know, a lot of exchange reps are also traders, and there's just chatting like everybody else, watching the markets. So you know, you guys are always welcome to just hang out basically and interact, because this is a 24/7 market we're in. This is crypto. This is the beauty of it, is we're all sitting and watching the charts. We're all on Telegram or on Teamspeak interacting, and it's all about this real-time information. That's what the point of Whalepool as a community is to provide resources. We have many different bots that are helping to provide market data, and so we're trying to just be on the very front of that information curve, which is so important in the markets. So I hope you guys, we've got 3 different Deribit guys here. We've got you guys in a group that identifies you, so that nobody can impersonate a Deribit employee. So you're welcome to just hang out, or you can always also provide support if there's traders that are having questions. Yeah, so it's great to have you guys as part of the community.
Thank you. We will try to be around a little bit more. It's absolutely true that we have been a bit absent in any trading community. Basically, we will try to change that a bit in the future.
Yeah, I think the biggest advantage right now that sticks out to me is that you're not pushing away US customers. OKCoin doesn't even accept US customers. BitMEX doesn't accept. None of them are accepting US customers. So basically, Deribit is the only place for US peoples to trade Bitcoin futures. I know it sounds like a crazy statement, but as far as I can tell, that's an accurate statement, isn't it?
Well, it's an accurate statement, but